Morning, guys. Keith at Crypto Bullseye, and this one's going to be an update on Kadena, and it's currently trading just under 40 cents. 40 cents is going to be a psychological barrier that we do need to overcome, but this, guys, is going to be your 10 minutes of self-daily development. Remember, 10 minutes of self-daily development every single day, and look back in 6 months, look back in 12 months' time, and see exactly where you've come. So why do I say it's going to be about self-development? Because in the last video, we talked about structure, why structure is key for me, and that's the first thing that we look at. Price action's king, structure's king. We need to understand what's support. We need to understand what's resistance. Then we can build on top of that. So this is going to be a follow on from the last video, and this one's going to be using Fibonacci and how to use Fibonacci to your advantage, because we talk about structure, we talk about support. This adds confluence to our support and resistance levels, and I'll show you this little magic trick, guys. It's going to blow your mind. So let's dive in to Kadena. And I told you I'd self-develop you guys. This is continuing from the previous video, and we showed you how easy it is for you, every single one of you, to identify and understand where the sticking points are on any chart. It's like joining the dots, guys. The more sticking points that have happened in the past, the higher the probability it is of getting a sticking point in the future. It's as easy as that. And each one of you followed that along with me in the last video. So pat yourself on the back. So this one's going to be a follow on from that. And this is going to be the magic Fibonacci, guys. This is what I love, Fibonacci. And I said structure's king, guys. Structure is king. Fibonacci is part of that structure. I'm going to show you exactly why. But firstly, I'm going to show you how to use it and how you can identify how strong or how weak a trend is by just understanding how far a pullback is on the Fibonacci retracement tool. So where do we look? Where do we look? We are going to apply this to the Kadena chart very shortly, but I just want to show you something very quickly. So you've got Gann and Fibonacci tools on the left-hand side. Click that. You've got your Fibonacci retracement. This is what we're interested in here. Now, this is how you can identify how strong a pullback is and whether the bulls or the bears have got momentum at any given time, and whether the trend is getting stronger or whether the trend is getting weaker. So you get in, if it's an uptrend, you've got your Fibonacci and you're taking it from the low, and then you're going to put it all the way to the high. So you've got to imagine that price is doing something like this. There's the low. You've got a big push all the way up here. You've put your high in, and then you're waiting to see how far the pullback is. Now, this is a little trick, guys. Identifying how strong a trend is by using the Fibonacci tool. If you come back and you get a reaction from the 38.2% retracement, and then you get a push to the upside, that is signaling a strong trend. If you get a pullback to the 618, what's the 618? They call the 618 the golden zone. Price often comes back to the 618. That is still bullish, not as bullish as the 382, but the 618 is still bullish. Push up from the 618 would still be bullish. Now, as you get deeper and deeper and deeper and start testing the 786, that's signaling that this uptrend is getting weaker, because the bears have managed to push price really close down, and 78.6% of this previous move, which is getting closer, guys, to the low. Once you break the low, remember what happens once you break the low? Trend is reversed. Expect a lower high and a continuation to the downside. So that's an uptrend. We'll do a downtrend next. Get rid of that. So we've got our Fibonacci retracement. And we're going from the top this time to the bottom. And then we're waiting to see how strong the bears are in this instance. So you're going to get your Fibonacci tool. There's the high. You're coming back down to the low. And then we're waiting to see 38.2, strong, continuation to the downside, signaling the bears have got full control. 61.8, golden zone, expect a reaction, continuation to the downside. 786, expect to come back and test this previous area here, and then potentially a bounce back up to this area. So that's how you can use Fibonacci to your advantage. Now, what we're going to do on this Kadena chart is something a little bit different. There's the high. This is where people measure it from, all the way to the low, down here. And then we look for sticking points. So we're going to zoom out. Now, the first thing that you need to ask yourself, the first thing that I ask myself, I look at the Kadena chart, I look at where it was, $9.69. I look at where it is, 39 cents. Do I think that this is going to put in a new bull market high during the altcoin season? No, guys, I don't. Could it? Anything's possible, but I'm not expecting it to. This is where fear and greed comes into it, guys. So how can you use Fibonacci to your advantage here? First and foremost, 618. Got a reaction at the 618, created a base here at the 618. Haven't got much to go by here, but this is how you can reduce your risk, You might reduce your reward, guys, but you're reducing your risk and still getting a decent allocation of reward. So what we're going to do is we're going to bring this down and test it to these different swings and see what areas that these Fibonacci numbers are getting a reaction from. So you can see the 786, there's a little base here. You've got a little base at the 618. We're not getting too much of a reaction here. You can see that. Now, how greedy am I? I'm a conservative trader. So I'm quite happy to get a 5, a 10x if the market gives me that, and then we can retrace about 20% of its previous all-time high, and you can get a 10x, guys. That's good enough for me. So we can reduce our risk. And we're going to look and to find out together where the area of the most sticking points are on this Fibonacci. Coming back here, guys, you've got a touch, 38.2% retracement, push to the downside, signaling that the bears have got control, remember? But I'm going to go one step further here. I'm going to keep pulling it down. And I'm going to keep pulling it down, guys, to this area here. To this area here. Now, one thing that I can see here is we're getting some sticking points. We've got a base here. That was a rejection point here. That was a rejection point here. And that was a rejection point here. You could see that was a rejection point at the 618. And you can see we've got a rejection here at the 786 before we started a continuation to the downside. So you can see one thing. We're building in our support. We're building in our resistance. Go one step further, actually, guys. Make it look a little bit clearer. I'm going to add in some new Fibonacci numbers. I'm going to add in the 0 because that's the base. That's the support base. That's the bottom. Then we're going to add in 236. Let's see if we get a reaction from the 236. Doesn't always get a reaction, but let's have a look. 236 and then okay that. So let's have a look. 236. We did get a reaction at the 236. You can see rejection, support, rejection, rejection, support, rejection. So the 236 is a strong area. Now that's going to be our next resistance point, guys. Structure. This is part of the structure. So when we zoom out now, you can see that every single one of these Fibonacci numbers have been respected. Every single one. You start here with a 0. You've got the 786, that's been respected here. You've got the 618, that's been respected here. You've got the 382, quite a few times that's been respected. And we've even added the 236, and we know that that's been respected. So that is the next resistance point, and that is from where price action is now. 164% to the upside. So this is what I mean, guys. How greedy are you? 164% to the upside in a short amount of time. Would that be good enough to you? What's the risk? Let's have a look at the risk, because the risk is the most important thing. Risk to the downside, you've got to this support base 18%. If you go below the support base, around about 25%. So the risk is a lot lower than what the reward is. You can stick your risk to reward tool on there if you took price action from here, understanding that you know that when we breach, guys, when we breach this level here, we want to be out as soon as possible. Why is that? You look back and you know that this has acted as support all the way. This is the support base. If we go below the support base, you want to be out with the limited amount of capital at risk. So there's your reward. There's your risk. 5.01 risk to reward. So what does that mean, guys? I said it in the last video. That's a 5-to-1 risk to reward. That means if you took this trade 5 times and then you won once, guys, that's a 20% win rate. You would break even on that. Now, if you won twice, guys, that's a 40% win rate. That means you lose 3, you win 2. That means, guys, that is a money printing machine. Now, is it as easy as you think, guys? Are you going to get 5-to-1 risk to rewards that are going to get set up exactly like this on exactly the same pair that you want that's been back tested? Probably not. But what I'm saying, from a risk to reward perspective on Kadena, this one looks pretty good to me, and that's why I'm bringing it to your attention. But more importantly, it was more for education, because you can see how you can reduce your risk by just bringing the Fibonacci levels down, see what sticking points get the best area and have had a reaction previously the most times in the past, and then understand exactly that that's where the area of resistance or support, depending on whether price is above or below, is going to get a reaction. So you understand there, guys, you understand exactly, and we've worked out together what our risk is and what our reward is just to this 236, because we expect to get a reaction there. Look, reaction, reaction. Look how many times. This 236, 236. So we're expecting to get a reaction there. It doesn't mean it can't break through and spike exactly like this, but from a probabilities perspective, this is the area that's likely to get a reaction and a hit from there. So why not reduce your risk, guys, and have a higher probability move? So none of it's financial advice, of course. So guys, I'm on the road to 10,000. Help me get to 10,000 subscribers, 9.41 at the moment. I want to get to 10,000 within the next 30 days, guys. So if you can help me with that and you found this video useful and you want more tutorial videos as well as price action videos, and I'll combine it with you and help you self-develop your 10 minutes a day, subscribe to my channel. Been working with Brad as well in the Agape token on Real Infinite Crypto. That's been fun. Go and watch the interview with Brad, actually, guys. I had an interview with Brad a few days ago, so go and watch that. And then don't forget, join the Discord group. That's where all the magic happens. That's where I take all your chart requests. That's why I would discuss crypto all day long. It's completely free, by the way. Link in the description below, and I'll see you in the next one.